Hello everybody, how's it going? It is February 24th and this is my portfolio. Let's just fix that camera real quick. Hopefully it doesn't fall over. Excellent. Alright, so let's talk about today and yesterday. It wasn't good. We're down 1.5%. On the daily we're down 0%, 230 bucks. On the weekly we are down. Oh, we were up. Oh wow, look at that. Nice. On the weekly we are down 2%, or $1,097. On the 1 month we are down 119 bucks, so not bad. On the 3 month we are up still 3%, $1,397, 1,400. And on the 1 year we are down 1%, 528 bucks, or, well, I mean 1%. And all time we're still down 1%, 1.3% I think is what it told me earlier. Ouch, we're down. It's unfortunate. Anyways, 736 bucks. Let's talk. So I did just right before recording this, I did just revamp my buys. So if you notice, I have about 12,200 bucks, $12,300 about on the side, and that is because things were going up. I started saving money. I started saving money for a little while. So I did just make 2 buy orders. I did make 1 buy order this week, and that was for Intel. I bought Intel this week. It was down huge. I put in another 500 bucks, bringing my total to, I'm down 500, so I have about $2,000, which is the max position. That's what I was hoping for. So I wanted it at about 25 bucks. I now have a average of about, I don't know, I think it was $33. Not bad, yeah, $33.76. So we're at the average. Yeah, or rather, I'm at the average that I wanted to, about $30. So we're just gonna let that sit. And they decreased dividends by like 66%. Ouch. Ouch, that it sucks. And I do have buy orders set for Berkshire Hathaway, BRK.B. Buy order set for another about $3,000 Canadian, or $3,800 Canadian, $2,750 American. I have 10 shares BRK that I'd like to buy at $275. So we are $25 off from that price point, or about 10% down. We're waiting. 10%. It can happen. It can happen slow, but it can happen. And I have another buy order for $2,000 for XEQT. I wanted another 100 shares. That's what I wanted, to about $2,400 in XEQT. I set a buy order, or sorry, $2,300. I set a buy order for 100 shares at $23. We're waiting on that too. So 100 shares, I would love for it to fill. I don't know if it's gonna fill, but things are coming down. Things are coming down, and I'm patient, and I just wanted to make those orders, set it for 90 days, let it sit. I'm not in any rush, and by then, you know, I'll be probably minus 7-8%. I'll be averaging down just like I wanted to. Yeah, I'll be averaging down from my average of $25.83, so 26 bucks. $3 down is when I'll be buying the next about 10% or 20%, 15% of what I have. So, not bad. We're going to wait on that. How do I go back here? I guess I just go to portfolio. Oh, that's a pain. So, yeah. We're just holding on right now, holding on for dear life, really. We're still up on a lot of positions. Like I am still up on Berkshire Hathaway. When I buy it again, I'll be buying it at 0, not lower than my average. So I know that's maybe a risky game. I don't think it is, but I will be buying at my average because I think it's a good price, and I should be accumulating shares at those prices that I think are good. So 275 is what I thought was good. Berkshire Hathaway's owner, not Warren Buffett or Charlie Munger, but the other young man, it's like 45, who's taking over. He's been buying at 265. So he's been a little lower than me. I'm not going to catch the bottom like he's going to catch his own stock's bottom, right? I'm not going to be able to do that. So 275 is the money for me. Dream Industrial. I'd like to buy more Dream Industrial. That's still ripping up. Dollarama. Would love to buy. I'd love to throw in $2,000 into Dollarama, but it's just not falling. It's like, what's it, ATD, Couche-Tard? Couche-Tard is not falling. It's not coming down to where I want it to. Home Depot is, though, and I would love to buy probably another maybe 7-8 shares of Home Depot. I do see Home Depot as a strong, just a strong company that I'd like to own, especially because it will be coming down, because it is going to go through some hardship coming up, because houses, man, it's not looking good. Meta, I'm still negative 10% on Meta. Not bad. Not nearly as bad as it used to be, and that's about $2,000. So I've been, pretty diligent on making sure that every stock that I wanted is about $2,000 in. So I wanted a bunch of stocks, and I wanted it to be equal weighted, but at the price that I wanted them at. So, it's going to look really weird for a long time. This portfolio is going to look really weird for its entire, lifespan, essentially. But it will just be stocks that I like at a good, fair price. And, I'm trying to be like a dollar cost average value investor. So, like, buy in hybrid value investor / dollar cost average in. I pick it at a percentage down, and then I average down from there. It's just how I've been running this portfolio and how you guys have been seeing it. Maybe you're not seeing it the same way I am. That is 100% a possibility. So that's what I'm trying to do and where I'm going with this. I would love to pick up more of these smaller stock holdings that I don't have a lot of. Walmart is one of them. I'm not touching Smart Center REITs, but Microsoft, I'd like to double up my position on Manulife, but not when I'm 17% up. Meta, I think I'm done averaging in unless something catastrophic happens and I can buy in at like a super good deal, even lower than what it was, which was crazy. It was in the single digits of price to earnings, and it's a very profitable company with some expenditures. Intel, unprofitable company, averaging down. So we're catching falling knives. If there's anything to be said about this portfolio, what happens when you catch every falling knife? We'll see. We'll see. So, Google, same thing. I'm 23% down on Google. I'd like to buy more at about, I think last time I bought it was 85, so if it goes below 85, I would like to buy a little more. It's becoming a pretty sizable portion of my portfolio. I know they had problems with their AI. That's hilarious. Everybody's hopping on the AI trend, but honestly, when ad revenue starts to pick back up, when right now we're going through a dip in ad revenue, when that's on the swing up, I want to already have bought my shares. Does that make sense? Like, I want to already have what I want, and then when things start to go back up, I ride that. And that's what I'm doing with Google. So right now we're on a downswing. I did average down when it did hit 85, and I will average down again when it hits 75. Probably 75. Empire REITs, another company. I'd like to probably quadruple my position. Not yet, but I'd like to. And I'm right at my average. I believe this is where I bought last time too, about $37. So yeah, not bad. Dollarama, I would love to just at 10x that position, but right now it's 50% up. We're gonna wait. Dream Industrial, been doing pretty good with Dream Industrial. Honestly, it's only about $1,500. I could probably buy another 75 shares. I'd like to buy another 75 shares. So I'm at a 125 now. I'd like to, drop the extra I guess it'd be like $700. Top it up to about 2,500. Ride out Dream Industrial. They don't increase their dividend. That's okay, because they pay a dividend that if I catch at the right time, then I can get, a 6% yield on my money that I put in at the time. So it might not be 6% forever, it might be 3%, but at the time it was 6, and I can add that 3% to something else. So I can funnel that dividend money into something else that's a better deal at the time. Caterpillar, 17% up, not buying more. Berkshire Hathaway, not buying more. Bank of Nova Scotia, I'd like to buy more. 8% up. I don't think I've seen this in the negatives too much, so we're waiting on that. Alibaba, 20% down. That was actually 9% down not too long ago, so this is a highly volatile stock. I don't think I'm going to put any more in, if that, because it is such a out of space, out of my, there's so much complications to this investment that I'm going to stay away from it for now. Algonquin, I guess now is the time because we're in that, but they have so much debt. We're going to let this one ride out for a little bit, and then when we see that Algonquin catches up on debt, maybe next quarter, we'll take a look at it again when they release earnings, and we'll see the Kentucky Power deal still going through. I'm pretty sure we should look that up. Algonquin Power is probably one that I've been sleeping on a little bit, so I'll probably do a little research over the weekend. And Apple. I'm not racing to get Apple. I think Apple's already a pretty sizable portion of my portfolio, given that I own Berkshire Hathaway. So I'd like to buy Apple. I'm at 146. Last time I seen it at 135. I think I had a buy order set at 120. So we'll probably wait for that again. If I could catch it at 120, I will buy it. I don't care if I'm already buying Berkshire Hathaway at 120. Apple, I see that as a pretty alright deal. Maybe even lower. Maybe $100. It depends on what it looks like at the time and how much money I have on me. But right now, we're trying to top up Berkshire Hathaway XEQT. Anyways, guys, this was just a longer video. I wanted to make a little bit longer of a video. Just because I don't think I get a lot of view time on my videos. It always seems to be half of my video, so I always get half length watch time, not like 2. So like I made a 10-minute video, I got 5-minute watch time. I made a 2-minute video, I got a 1-minute watch time. Yeah. It's bad. So anyways, guys, peace out.